Hello, my name is Thomas Massey. I am a CPA, and in this video we'll talk to current and prospective small business owners wanting to understand the similarities and differences of an LLC versus an S-Corp. I have worked with hundreds of small business owners in helping them to stay compliant and have guided many business owners in forming an LLC or electing S-Corporation status. First, we will talk about LLCs. An LLC is the most basic business structure. You're given a separate entity to operate under. You're given an EIN number. A single member LLC would operate as a sole proprietorship, whereas a multi-member LLC would operate similar to a partnership. It's not very complex. The management system is flexible, meaning that any one of the owners are able to speak on behalf of the LLC. You would file an articles of organization with the Secretary of State in the state in which you wish to form your LLC. There is an unlimited number of owners or members, and it is considered a pass-through entity, or you're able to elect to be taxed, such as a C corporation. Profit is subject to self-employment tax. Self-employment tax is 15.3%, which is Social Security and Medicare. If you were an employee, your employer would submit that on your behalf to the IRS and would pay half. However, as the business owner of an LLC, you are assessed that when you do pay your taxes. An LLC that is owned by one individual, once again, is considered sole proprietorship. You would file a Schedule C. That Schedule C is included with your personal tax return, and that is due April 15th and then extended to October 15th. Whereas if you are a multi-member LLC, you would file a 1065. That is due March 15th. And then you would use the K-1 to be entered on your personal tax return that is due April 15th. However, the March 15th business tax deadline, it would then be extended until September 15th if you did file an extension. An LLC has less stringent reporting requirements, and once again is able to be managed by any one of its owners or members. Usually an LLC is the first step for an entrepreneur. In a situation where an entrepreneur is just starting their business, they may have a lot of expenses, but may not have a lot of income. They're able to take advantage of that net loss. And if they don't use it in that current year, they would be able to carry it forward to future years. For example, an engineer that has a W-2 job takes advantage of being able to deduct this net loss of $5,000 against $100,000 of taxable income. So instead of paying tax on $100,000, they're paying tax on $95,000. Now we will talk about an S-Corp. The main requirements for an S-Corp is that it is a U.S.-based business, that it has 100 or fewer shareholders or members, and there's only one class of stock. An S-Corp is a pass-through entity, meaning that the tax is assessed on the personal level. Their formal management is required. You will have to designate a board of directors or an officer to speak on behalf of the S-Corp. Their taxes are filed on the 1120S, which is separate from the personal return. The 1120S is due with the business tax returns at the date of March 15th. And then it is extended to September 15th if you do file an extension. But when you file that 1120S, you receive the K-1. The K-1 would be entered on your personal tax return. The K-1 includes the owner's share of income and expenses and other deductions that may be included, such as guaranteed payments. If the S-Corp meets certain threshold requirements, it may also be required to report balance sheet information, such as the total amount of assets, liabilities, and the owner's equity at that point in time. Another requirement, and a big requirement, the IRS looks at when looking at S-Corps is the reasonable compensation. Think about reasonable compensation is if the owner of that S-Corp provided services to that S-Corp for the year, what was the fair value or fair market value of those services? Or if that S-Corp had to pay an outside person or outside contractor to perform those services, how much would they have to pay? Now, as far as the tax treatment and paying yourself a salary, we talked about the 15.3% self-employment tax for an LLC, but for an S-Corp, you would submit payroll taxes, which is where you would pay the Medicare and Social Security tax, but you would be able to write that off as an expense for your business, but you would also submit that on behalf of yourself, the owner, as well as any other W-2 employees that you have to the IRS, as well as with any other estimated taxes that need to be paid throughout the year. An LLC can file a Form 2553 to be treated as an S-Corp. Once again, you will be given a little bit more stringent reporting requirements. All shareholders have to sign off. The IRS will give permission for the date the S-Corporation status becomes effective. The S corporation status must be maintained in order to stay compliant. Once again, the S corporation has to have a designated board of directors or an officer that is considered to be managing that business. The S Corp is also able to use 1099 contractors, but a 1099 must be sent for each of those contractors that will be included as contractor payments on your tax return. LLCs are better for businesses that are just starting and may have a lot of deductions, and they are in their early stage of businesses but might not have much profit. The owner may benefit if still working a W-2 job and by using the deductions against their W-2 income. Document retention is required. However, businesses that may not have the funds or the time to dedicate to that part of the business may benefit from having less stringent reporting requirements. Whereas with an S-Corp, it is common for entrepreneurs to switch from an LLC to an S-Corp when their business has started making substantial profit. Business owners should work with a CPA or a business tax professional when submitting payroll taxes and also estimated quarterly taxes for their S-Corp. In this video, we talked about the differences of an LLC and an S-Corp and the pros and cons of each, and the common scenarios in which a business owner may look to benefit. Which formation do you prefer? Like, comment, and subscribe for more CPA and tax accounting advice for small business owners. Sign up for my email list to receive regular updates, news, and reminders at the link below. And if you would like to receive personalized assistance, please book a call.